Good morning from Chicago traders. It's 8:03 a.m. Chicago time on Tuesday, the 2nd of February, 2021. This is episode number 1929. Derivatives trading is not suitable for all investors. This morning, we're looking at a risk-on market as we dive right into the Convergent Trading pre-market summary sheet. Solidly risk on. We are seeing, of course, this was done about 10 minutes ago or so. The leader today is crude oil, up 2.43%, currently 2.65%, trading at $54.97, almost $55, up $1.42. The Euro Stoxx 50 again taking the lead, followed by the Russell. The Russell's up 1%. The DAX is up 0.9. The S&P is up 33.75 points, trading at 37.9950, battling that 3,800 century figure yet again. And that's where we stand this morning. So allocation is out of treasuries. And look at that silver. Silver is getting hammered. Currently down, it was down a little bit more, but currently down 6.26%. If you recall, yesterday it was up 11%. Silver's back below the $30 mark, 27.56. The rumor that this silver is getting the attention of GameStop stock by Redditors has actually been refuted in that there's a clear statement that this has nothing to do with a crowdsourced push in futures, which, I'm partial to futures, of course, over equities, but it's really a lot harder to do what they're doing at GameStop in the futures market because there's a central exchange and all trades have to go through the exchange and get matched with other market participants. There are no dark pools and there are block trades and things like that, but those still have to be reported to the exchange and the size of which is shown. So much more transparent in my opinion. But again, as I said, I'm partial to futures. Gold is off today. Currently, gold is just squeaking, is just above silver. And the biggest loser on my quote page or quote board, gold's down $27, trading at $18.37 or 1.45%. Today, we're looking for some big earnings. We had some big earnings this morning. In fact, Pfizer came out and forecast sales at $15 billion from the coronavirus vaccine. Very lucrative business that it's making along with German partner BioNTech, and raise its full-year profit forecast. UPS posts a 26.6% rise in quarterly adjusted profit. UPS being a shipper, of course, in an economy that's completely more dependent on shipping, and so on and so forth. As far as earnings, I started talking about earnings. We did get BP this morning. They surprised by negative 62.5%, expected at 8 cents, came in at 3 cents. Alibaba is pretty much in line. Exxon came in at 3 cents, was expected at a penny. And then of course, as I said, UPS came in at $2.66 versus $2.14. After the market today, we get Google. Google expected to announce $15.90 on $53.13 billion in revenue. Amazon also announces today, expected at $7.23 on $119.7 billion in revenue. That's just mind-blowing for Q4. Just huge numbers. Electronic Arts as well. So that's where Amgen. So after the market, the key releases: Google, Adelaide, and Amazon, Amgen, and Electronic Arts. That's what's on deck for after the markets. In terms of economic releases today, we have we did get several numbers out of Europe. You can look those up. Eurozone GDP growth came in a little bit better year on year, negative 5.1 versus negative 5.4 and negative 6% expected. We do get IBD tip optimism at 10. We get Fed's Mester at 2 Eastern. We get Fed's Williams speech at 2 as well. API crude oil stock after the market close, and total vehicle sales at 7 Eastern. Today in the S&P minis, we're at 230,000 contracts currently. That's the up-to-date number. And the overnight inventory is 94% long. 94% long. Remember that. On 44 points of range, we went from 3760 to 3804. We have a thin multi-distribution profile rallying, basically trending up, staying above VWAP and the point of control. So the range is relatively high, but the volume is in line. The volume is okay for today. Let's hop on over to our review segment. Yesterday, the primary scenario is the green line. The green line. We were looking for an open in the 37 area. Was looking for a drop either to 28 or 18. So I was looking for a pullback, rebalance of inventory on this rally up. Was looking for a pullback to 28 or 18. Was looking for an impulse back up above the open and a push to 74.75. That's a simple plan. Some really repeated and repetitive levels, the 28, 18, 74, 75 key areas for the last month or so. So again, open, drop to 28 or 18, impulse up, push to 74, 75. That's the plan. Here's what actually happened. So that's the before picture. This is the after picture. We opened a little bit higher at 37.40, and then we dropped. We had responsive selling back to where 17 and a quarter, 18 was expected. Here's the 18. 18 was expected. Again, that's not why I'm using the 18. It's not because it's a closing swing here. The 18 is a prior all-time high and a key high from a while back, from back in December, early December. And then we churn sideways, and then there's the impulse. There's the impulse higher. Again, I'm going to bring this back. This is the impulse I was looking for. And then I put in a second impulse as a guess because I figured it would tangle up with 37.50, a fair amount, right? So this is the actual pullback to 18, went to 17 and a quarter, so through by a couple ticks, pushes in the middle, complete chop in the middle, and then we finally get the impulse up. I expected it to get tangled at the 50 right here. Did not. It just ground itself up to the 77 and 74. 74 is right here. 74, 75 was the target. So it was pretty much spot on. Of course, I don't expect the market to respond to levels to the tick. And by the way, just to be clear here for everybody, the idea here is not to be right. The idea is to lean on levels, market-generated levels, see the response, align with the market, take the trade, let it work, let it run, or let it stop you out. And yesterday happened to do that almost perfectly. The low that was expected, it was 18, and then remember the 28 up here. 28 was the other low. And the high was expected around 74, 75. We got 77, so that pushed right through, and it came back. We left this low volume. We closed above the low volume node. We closed above the initial balance, the two yellow lines. We closed above VWAP and mid. The market was really strong yesterday, and we closed with what? A very, very weak high. A very weak high into the 37 80 area. So the expectation is we are likely to see the high volume node above. What is that price? 37.94. Remember 36.94 down here, 37.94 up there. Things tend to repeat themselves in the markets. So that's the MCV right down here at 36.94, and then we have an MC VPOC at 37.94. Remember the 20s and the 94, 95s kind of repeat themselves over and over again in this product for some reason. It's been doing that for years. So that's where we stand. So coming into finalizing yesterday with the strength with which we finished the day, again above the low volume node, which happened to be the mid and which happened to be the VWAP. We closed above the mid, above the initial balance with a weak high. The expectation with the point of control at the upper end of the range at 37.6650. The most likely play from here is to squeeze higher into 37.94, and that brings us into today's session. And by the way, look at the delta here. As we were sitting down and sideways, the delta fell and went sideways. As we rallied up, the delta went positive, but not too positive. It just, the participation was very lackluster in terms of aggressors, but the price still ended up moving up or sliding up. Here's the overnight session, currently at 233,000. That's a little bit higher than what we would expect on an average day in the overnight session, but compared to the prior overnights, which were around 330,000 or something, and 400 plus thousand, 500 plus thousand, it seems like as we take on this rally mode, it actually somewhat confirms the rally mode. The participation drops, the volume just drops, and this is expected to continue to grind up. We have taken out the prior high. Yesterday took out the high before that. The one-time framing down has ended. We finished near highs, so we're likely to resume the rally. That was just a pullback. We're likely to resume the rally and check that high at 38.23 once again. That was the high from back here. We're very likely to check this in the next day or two, expecting it today. So we're currently stuck at the century figure, multi-distribution profile, but mainly rally profile. We're staying above the VWAP, which is the cyan line. We're staying above the mid, which is this blue line. And we're pushing through, and we're pushing through the point of control. The MC point of control right here, the overnight point of control is also right here. So this morning, what are we expecting? What is your guess? What is your guess as to what we'll expect this morning? I'll leave you some space to answer. You can put it into live chat. By the way, live chat's not working on the EdgeClear website. For some reason, YouTube stopped allowing it. So if not, you need to go to the YouTube feed and watch there if you want to participate in the live chat. There's a link to it from the EdgeClear page. So what do you think is likely to happen? What do you think the open is going to look like today? What is your guess based on the information that we have? I'll let you mull that over. Let's take a quick look at the overall picture in the markets. So here we have the Russell. This is the Russell. This is the Dow. This is crude, CL. This is gold, GC. And this is ZN, the 10 years. This chart here gives me a broad view of the market. You can see the 10s have created a rounded top and have moved back into balance, traded in balance yesterday, and are trending down this morning. Gold has been sideways, pop, and then a pop again yesterday, and is trending down. So Money is moving out of safety type of assets, moving into risk. You could see the Russell's in balance, but higher than the last few days, and the Dow is moving higher. And again, it's earnings season, so pay attention. Crude is higher as well. This is just a quick check, not on what's happening for the day like you would get from a quote board. Hey, this product is X% up or down, but to look at how the profiles are shaped and what we're looking at across the board in various products. So to answer the question of what is expected for today, what do we expect for today given the configuration that we're in? Here we go. I've given you a chance to answer that. This is what I'm expecting today. I'm expecting a choppy open. Why? Why a choppy open? I'm expecting a choppy open because we're opening on top of the MC point of control. We're opening on top of the overnight point of control. This maroon line right here. We're opening on top of the overnight point of control. We have volume in line. We are rallying. Expect a choppy open. So this morning I'm looking for chop, 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 chop. Inventory is about 94, 95% long. Look for a dip. We do have some structure here in the overnight in the 3790 area that may not be far enough in the 90 right here. We have VWAP, and this old structure might fall below into the 87, 86 area. So this is the 87 area before we come back to the overnight, and then we squeeze through the 3800 century figure, and we start to fill back into this gap zone, which was tested before but was not filled. I'm looking for a test of 23. That's quite a bit of range. Not expecting that much range, but it's really the direction that I'm looking for. That's scenario one that follows on to the one-time framing down ending and the establishment of one-time framing up, the break higher, the fall of the 10 years, the fall of the safety assets, the push of risk assets, and so on and so forth. All the things I've talked about coming together here to support this primary scenario if the auction was left to its own devices. And thankfully, we don't have a Twitter feud or whatever, constant tweeting, and a lot of drama on a geopolitical front. The market is really moving under its own power and is building pretty good structure. The rotations, I find, are more legible, so to speak. Again, not a political statement, but that's just facts. This is how things are. Open auction in range, dips down, pushes to 3804. 3804 has a fair amount of resistance in it, expecting it to squeeze up there, round, and then come back to the overnight point of control and push through the full session VWAP and start working itself back to where? To the 74.75. Does that sound familiar? 74.75 to check it from above, and then rest at the 37.94. So what this scenario is saying, look, we're going to balance inventory real quick. Inventory is not that high of volume, 94% of 220,000, 230,000. We're not saying that all of it's going to balance, but we're looking for a little dip. But once it pushes higher, it's not likely to stay above the 3,800. It's likely to round off. It's run quite a ways already overnight, and if so, then it's likely to retest that 74.75 from above, and if it does, then I'm looking for to hold and push the 37.94 area. So that's scenario two. Again, this is not a recommendation to trade, or this is not a trading plan. This is just a view of what the narrative, which is the supremely most important thing in trading in terms of understanding the ebb and flow of prices and the testing and the auctioning of various prices. The rest is all about execution, and 80% of execution is psychology. So there you go. You have the holy grail of trading right there in one sentence. Good luck today, and I'll catch you. I'll catch you tomorrow morning. Convergent members, we have our AMA today. The AMA is focused on the Trade Right 30-day challenge. This is the second day of the Trade Right 30-day challenge. Let's see if you can trade like a prop trader. Bring your questions to today's AMA. It's going to be dedicated to the Trade Right 30-day challenge. That'll be at 1 p.m. Eastern. Good luck. I'll catch you soon. Take care.